could you maybe share a little bit more about, what led you to joining Craft Ventures, and then maybe a overview of it as a venture fund?
Yeah, sure. Yeah, my shirt says Craft. So I've known David Sachs for a long time. When he was at PayPal in the early 2000s, and I was running StubHub, 2002 or three or something like that. I met him through a mutual friend, and kind of kept in touch with him over the years. And he actually invested in my second company, Spreecast, that I mentioned briefly. So we've kind of been friends and known each other for a long time. And he has a similar background, right? He's kind of an operator founder, who'd done a lot of angel investing successfully, and then decided to launch Craft in 2017. When I decided to wrap up Spreecast, he reached out to me and said, "Hey, why don't you come join me at Craft?" And I spent some time with him and some of the early people that were at Craft at the time, and and decided it was a great fit for me. I had started my career as an investor, as I mentioned, at Blackstone, right? So like my very first job was investing. I had always been an active investor in the public stock market, even as a kind of teenager. I don't know when I opened my Schwab account, but maybe I was 13 or 14 years old or something. So I learned how to buy and sell stocks, and had a finance degree from Wharton, worked as an investor at Blackstone, and then I was an entrepreneur for kind of 20 years. But I knew a lot about finance and investing, and I had done a lot of angel investing successfully, and I thought that getting back into investing, specifically venture investing, was a great sort of next step for my career. I knew that I didn't want to start another company. I had, at that point, in 2017, 2018, I had 3 kids. I now have 3 kids, ranging, now they're 10 to 16, but then they were whatever, call it, 5 to 11 or something. And so I knew that, I felt that like starting another company would be challenging with 3 kids, just the work-life balance questions, my own sort of nature. And I think is generally the case, is like when I'm starting a company, I'm so all in on it. It's like I have blinders on everything else in life. And so it's hard to do that and also like have a family and be a husband and be a dad. So I didn't want to start another company, but I love technology. I love software. I love startups. I love entrepreneurship. And it was a great way for me to sort of stay involved in all of that stuff without kind of, carrying the flag of being kind of a CEO founder myself, and be able to share a lot of my learnings and knowledge with, lots of founders who I work with today, instead of just kind of being so laser focused and, tunnel vision on one thing. So, so that's, and I've always had a lot of respect for David. I've kind of known him for a while. As I mentioned, he's, an extremely smart individual with a lot of super impressive experience and sort of track record in, like I said, both as an entrepreneur, as an investor. And every time I sat down with him, to talk about my company or whatever, I was always kind of leaving those conversations with like a new insight or a new learning. And I just felt like working with him would be just great for me personally, and just another opportunity to learn more. So, so it was a pretty easy decision, actually. Once he reached out to me, and I kind of spent some time talking to him about it, and kind of joined in 2018. I've been there now for about a little over 4 years. And I focus. So a little bit about Craft. So Craft is, we are primarily an early stage venture firm. We have kind of 2 products, I guess you could say. One is our kind of flagship early stage fund. It is, it invests that fund, and then our second fund is a growth fund. We more recently have added growth into the mix. Our flagship early stage fund invests in kind of seed A and B rounds, primarily of SaaS and marketplace businesses. Actually, most of what we do is SaaS, primarily because we see a lot more SaaS businesses than marketplaces. One of the things I think marketplaces are kind of hard to find, really interesting marketplaces. And so we don't see as many interesting marketplaces, but so probably 60+% of what we do is SaaS and, 30% marketplaces. But those are the two areas we focus on. David is an expert in SaaS, just given his experience from Yammer. I'm an expert in marketplaces, given my experience from StubHub and also a lot of other investments I've made. So we do seed A and B rounds out of the venture fund. The one caveat I would say there, and we can talk more about this, but is we really only, even at the seed stage, we don't do like pre-revenue or pre-product companies. Like we only invest in companies that at least have built a product and launched it. And generally speaking, have at least some users and growth in users that we can see. And generally they have revenue even at the seed stage. So they have revenue. It's not enough to raise a Series A. So maybe it's not like $1 million of net revenue yet, but it might be 100,000 or a couple 100,000 of kind of net revenue, and they're growing nicely. And so the seed stage we do is not like, two people in a deck. It's a little bit further along. But we do seed A and B rounds out of that fund. Check sizes range from, kind of a low of about $1 million up to a high of about 25 million in that fund. And then we have a growth fund now as well, which invests in the same types of companies, just a little bit later stage. Our growth fund is in a way, it's more like a late stage venture fund. We don't do like the, $5 billion valuation about to go public company investments. We do more the, call it 400 million to $1 billion valuation, pre-money valuation companies that, might be Series B, C, D rounds. Again, SaaS and marketplace companies. Those check sizes range from like a low of like 10 million up to $60 million check sizes. We have about $3.3 billion of assets under management now. We have about 38 people on the team. Our investment team is about 18 people, 17, 18 people. And then we have a 12 or 13. The investment team is primarily focused on identifying new opportunities, making investment decisions, winning deals, and then adding value to those companies after we invest. The platform team, which is about 12 or 13 people, all they do is try to add value to companies after we invest. They don't really get involved in identifying new opportunities or making investment decisions. They're just there to help our companies succeed. Half of that team is recruiters, so they're helping our companies with recruiting. And then the other half are like subject matter experts in things like government relations or information security or online customer acquisition, things that many of our companies would, like help with or advice on. It's a pull model. So we don't like push this onto the companies, but if they want help, they can kind of ask for it. And that's the platform team. It's about 12 or 13 people. And then we have sort of some back office folks that are involved in just kind of LP relations, fundraising, capital calls, distributions, things like that. Yeah, that's the firm. It's been a fun ride. It's obviously been an interesting 12 months with the market shifting. I've been through this before. Obviously, as I mentioned, StubHub was started at a time that is similar to the time we're in now. And then I obviously saw it in 2008 and 9. This is, the so-called end of the cycle. And this happens, business cycles are natural, kind of normal things that happen every, call it usually 7 to 10 years. This one was like a 13-year bull run, but usually they're shorter than that. I think a lot of people haven't ever seen one of these. So people are surprised, like what's going on, what's happening, but this is sort of the normal course of how the economy works. Anyway, so that's Craft, and happy to, talk more about, anything.